Good afternoon, everyone. Afternoon over here where I am anyway. The major averages, as you can see, are just under their all-time highs. The market direction model has been on a buy signal since October 23rd, and part of the recent self-learning of the MDM is in deciphering between a normal pullback and something more serious. It does have a self-adjusting fail-safe, and that is typically less than 2% from the buy price if you use, say, the 1x QQQs ETF. But despite the majors being at almost at new highs, before this year, the S&P 500 has never traded so flat and chaotic in its entire 48-year history. It was launched in 1957. The last time the S&P was this flat was in 1993. And you can see the chart here. It's coming up in a moment.
There's your 1993 chart, Dr. K.
Yeah, just slow on my end. There we go. And so you can see that it was flat, but it was coherent. There was a coherence to the price volume action as opposed to all the noise we've been seeing this year. And so money could be made, and was made in 1993 without too much fuss, despite the sideways nature of that S&P. But the battle this year, I think, really there's a big standoff between quantitative easing versus a sick economy that refuses to jumpstart. And fortunately, these sorts of anomalies always come to an end because this is downright external manipulation by the Fed, and manipulations like this of the same type in the same manner. They do have a limited shelf life. They don't ever persist because, as we've said, the only thing that doesn't change is change. So always expect change. So always be ready for this, as the markets approach new highs. Yeah, they could bump up against resistance again and started this sideways chaotic jump that has been much of this year. But it's just historically speaking, these sorts of patterns don't persist. And like I said, in the 48-year history, this is the first time the S&P has had this sort of sideways chaotic pattern. But these patterns that we're seeing, these flat patterns that are chaotic, maybe we are reaching an important tipping point in the market. So unless the Fed starts up QE4, or unless the U.S. economy really does start to improve, which of course will in turn help the global economy, this sideways pattern could be expressing a very important top. Now, a number of luminaries have spoken about important socioeconomic tipping points. Legendary futures trader Ed Seykota wrote a book called Gavopoly, which talks about the cycles of government. And he says that all governments eventually get too big, thus consume free enterprise and the middle class, which is what we're seeing today. And social instability and upheaval, and then ultimately revolution is the result. And that's why fiat currencies always have a limited lifespan, and there's no exceptions to this rule. I mean, if you took a penny at the time of Christ and compounded that at 3% a year, do it on your calculator, see how much you get. Let's just say it's well above a trillion and a trillion and a trillion. It's quite fantastically huge. But indeed, these recent major headlines that we've been seeing, and maybe this is what the markets are expressing, their very big frustration with governments is very Orwellian times we're living in. I don't know if you all see, most of you are in the U.S., but out here we see a lot of news that what I've noticed is people in the U.S. often won't see, probably because it's filtered. The UK and France now want to criminalize conspiracy theorists and those who contribute to such theories because they feel they're socially disruptive. I mean, that gives the government a blank check on what they deem appropriate. And to make it even more circus-like, Facebook has agreed with the U.S. to censor posts as socially disruptive. So, you've got over 1 billion people on Facebook, and of course the U.S. is going to see Facebook as the mother of all media, so it's going to have a hand in what gets filtered. And apparently this Facebook censorship has been ongoing for a number of years. It's just more recently that it's kind of been, I think it was Zuckerberg who mistakenly thought he was off camera, and someone had their phone and taped him admitting that Facebook is currently, it does filter, well, he said Facebook filters posts, and right now they are filtering things that are related to Germany on some note. So that was, and that got sent around the internet. So, you know, where the times are, you know, we've got these governments going, war on this, war on drugs, war on terrorism, and you know, the governments are using social carnage as an excuse to pass more laws, which then give the government more power while taking power away from the individual in the name of supposedly protecting our rights. But in light of these terrorist attacks that we've all been witness to this last weekend, the G20 now is giving the blessing to the NSA in the U.S. to do whatever it wants. And some people in the UK are screaming for more government protection. So indeed, again, some of you might have caught this, 80% of the French, according to a poll, they're willing to give up civil liberties for security and government protection. And this is not a whole lot different from how Americans responded after 9/11, which resulted in the Patriot Acts, among other laws. And the problem is that once government has power, once power is given over to government, it's never returned. It's just like laws. Once they're passed, it's nearly impossible to get them repealed. And that's just a fact of life. So, you know, without going on much further about this, because I want to get back to the market, but, you know, over in the UK, the government's passing its investigatory powers bill, and that gives them the right to look into a person's phone or computer at a distance without the need for a court order. So it's a complete violation of our private rights. You know, these are the times in which we live. So the markets maybe are expressing a major, you know, very important top here as we go forward. And incidentally, if the market really did start to correct beyond 15 to 20%, odds are that the Fed would probably step in with QE4, and thus basically once again manufacturing an uptrend. And a good analogy to that actually is that governments trick people into giving their consent by clever manipulation of the mainstream media, and that is called manufacturing consent. So at any rate, the global economy, is it improving at all? Well, it doesn't seem so, and oil and other commodities don't seem to think so either. In fact, what was interesting to me is that the CRB index is now at a 15-year low, and it's about to hit its all-time 48-year low, because it was started the same year as the S&P 500. So I'll leave you all with, as Ed Seykota once said, in an out-of-character colloquial fashion, something just ain't right. And that was what sparked his book, Cavopoly. I do encourage everyone to pick up a copy if they have it. It's a great read. And with that, we'll turn it over to Gil.
You just made me incredibly depressed. But, you know, it's true, because in Europe I hear that they have laws now where you can actually be arrested for so-called hate speech. And, of course, they're talking about that now. Yesterday in the news here, people were talking about Hillary Clinton wanting to, or threatening the comic, I forget, one of those comedy outfits in Hollywood. I'm trying to remember the name of it. Comedy Store or something like that. But she basically, they're trying to shut them down. Hold on one second. I'm noticing something. My trading platform over here suddenly shut down. I'm not sure why.
Well, I'll continue your thought while you're looking at that.
It's back now. Anyways, go ahead.
Did you know? And by the way, people, don't ever take anyone's word for anything. That includes mine and Gil's.
No, you can take mine.
Google this stuff. It's so easy to find out for yourself. And what I was going to say is, maybe people aren't aware of this, but people have been arrested in the U.S. and the UK going back a number of years for Facebook posts, texts. I'm not talking about, you know, illegal, like real bad stuff. I'm just talking about texts that people put out there expressing their views that the government disapproved of. And they were actually arrested, and some of these people were jailed. There was that student there's a student over in the UK. There's a Human Rights Act that exists right now in the UK, which, by the way, David Cameron's trying to get repealed. But that Human Rights Act should have protected the students' rights for posting what they posted, which was a politically inflammatory post But so what? That's their view. That's their opinion. And you know, this is out there. This you know, this makes the press. And I think there's been I noticed on the web anyway, there's a number of sites that are trying to wake people up, and they're trying to bring the truth home. And what I like is that these sites were tiny little things some years ago, you know, just really nothing to pay attention to. But with, I think, the world where it's headed, these sites are now have Alexa rankings as low as 3,000, meaning they are in the top 3,000 of the biggest, most trafficked websites in the world, and there's over 100 million websites. So if you have an Alexa ranking of 3,000, you are incredible. You have a huge audience, and these sites seem to only be getting more and more popular. So it's great that, you know, that it's very hard for truth to make it to the surface, especially before the internet. But I think what we're witnessing is possibly a changing of the guard, and, you know, as Ed writes in Gavopoli, you know, governments don't last, and maybe we're at the dawn of a big change in what we see in the world, you know, a big change for humanity. And you know, there's some catalysts, I think, that are going to help that as well, but I won't go into it here. But you know, I would be actually optimistic, because things are just getting worse and worse, and it's almost like, oh, how much worse can they get before they get better?
I think okay. I think what you're looking at in the market, though, is obviously a move back up to the highs. So you can see if we draw a line across the tops here, you're pushing up into what could become an area of resistance. So I'd be watching this. I tend to think, and I just continue to operate on the basis of this market being a short-term trader's market. And you have, you know, your upside moves in stocks, and then these can be followed by downside moves. And you just kind of move with the stock, and that's basically, you know, what you're looking at here. So let's take an example of you know, Netflix. This is a stock that for a couple of days was a nice short coming down, and then it bottoms out here. It gets into this sort of this axis line here. If you use my highlighter here, sort of draw it across here, you can see levels of resistance and support in here, and so it comes down through this, and now we're back up trying to move higher on a breakup. But you notice that, yes, the other day was I gotta get better at using this. I just figured out how to use this last week, but this was a pocket pivot coming off of the, well, coming back up through the 50-day, the 20-day, and the 10-day moving average, and then you broke out on above average volume. So now you're up here in base breakout land, and this is the look of the base, which you'll notice is not all that tight. It's a little bit loose, and so I'm wondering, for example, if you were alert to this and you bought the stock in here as it was turning, and as it gets above, say, the 20-day or the 50-day, you use that as your trailing stop once you see the turn. And sometimes I'll do that. If I'm short something and I feel it start to turn against me and it pushes through a supposed resistance level along a moving average, then I may back off on the short and then flip back to the long side. And that's not unusual in this market for me to do that and just take advantage of a quick trade. Now, this thing went a lot further than I thought it would. I thought you might get back up to the highs here at 116, but you just went clear through them on pretty big volume, and you've broken out, and now you're pulling in. I don't think I'd be buying this thing here, to tell you the truth. With you know, this breakout from what is really a late stage base, what I would be watching for, and what you notice here is you can see it's somewhat loose relative to the prior pattern. You know, when it's coming higher through here, it's pretty tight. Now it's loosening up, and so you're breaking out from a loose base. So I'm skeptical of the breakout, and you really haven't broken out to new highs yet. Maybe you push back, you push a little further, but I'd be watching this for some kind of reversal because it might fail. And if you recall, we were looking at price line a few weeks ago. Let's see if I can get this right. Where I was talking about this double bottom base in here, where it's pretty, it's choppy, it's loose. The second low is higher than the first low, so it's not really the type of thing that you want to see for a double bottom base. And the stock breaks out, okay, and it looks like it's, you know, gonna run. And actually, from the breakout point here, the midpoint of the W and the double bottom, you get a pretty nice move. But then what happens is it gaps down on earnings, flutters around the 50-day moving average, and then breaks to the 200-day moving average. That was a great short. So I actually played that. It was coverable right at the 200-day. That's your first downside target. Now we're watching to see. You can see you draw a line across these lows here. Let's see if I can get my pen here. So if we go along these lows here, you can see that you're sitting along. I don't like that color either. Let's see if I can. What do you guys vote for? Just black, plain old black. So anyway, so you see that you pulled down into this line. So I'm looking for some kind of a rally off the 200-day moving average into the 50-day moving average from here, if it wants to carry that high. I don't know if it will, but a lot of times when you have this late stage base breakout failure, what will happen is you'll see the stock bounce back and forth between the 200-day before it heads lower. So today's options expiration day. Is it triple witching, Dr. K, or single witching, or what is it? Do you know?
I'm not sure which one.
Double witching?
But the volume. Let's see. Yeah, it's even quadruple.
Somebody's asking, there are likely some really good investment themes at this inflection point, ideas. I'm not sure what that means. I don't start with investment themes and then look for ideas. It's usually the ideas that are popping up through my screens will lead me to the investment themes rather than vice versa. So I focus on what the stocks are actually doing, and then the stock action leads me to the so-called theme. And I guess you would say that that's a sort of a bottom-up approach rather than a top-down where you try and identify some macro theme and then look for ideas. So that's this kind of stuff for brokers who like to bullshit their clients with good stories. That sort of approach. I just watch what the stocks are doing. So in this environment, you can see what the stocks are doing. There aren't what I would call any fantastic breakouts. You know, if you want to call Netflix your fantastic breakout that you need to buy into, and it's going to lead to a huge upside from here, I would be a little cautious on the basis of this loose base, which reminds me a little bit, just in terms of the looseness and the point from which it's at which it's occurring or forming, makes me a little bit, or reminds me a little bit of Priceline. So looking at that, just watching that thing, see if it rolls over in here. If you really wanted to buy this, I would look for a pullback into 115 down to the 10-day line at 113.86, rather than chasing this, because that's a pretty sharp move. It wouldn't surprise me to see it pull in here, and then I'd like to see what it looks like when that happens. But I think in general, it's a trader's market. It's not really an investor's market. If anybody's has bought anything recently and getting a nice big breakout uptrend, breakout from an uptrend that occurs after a breakout and sustains for a long period of time, I'd like to hear about it. Most things are pretty choppy. Probably one of the best stocks out there, and I think we put this on as a pocket pivot somewhere, I think right here on this day. This has moved higher, but if you can see, if you don't jump on the pocket pivot, what do you get? You get a breakout here, and yeah, it's pushed a little bit higher, 7-8%, but nothing spectacular, nothing that you would call a 50 or 100% move where you're going to make a lot of money. So the issue becomes, where do you make big money in this market? I don't really see that happening anywhere just yet. But maybe something develops here. But like Dr. K was saying, the U.S. economy is still pretty weak, and the Fed is probably likely to put into place QE4 before it starts raising rates in any hectic manner. Now the assumption, I guess, is that they're going to raise rates based on the minutes that were released the other day. They're going to raise rates in December, and they might do a quarter point, but that still doesn't really have to mean too much. And I don't think the market's really worried about it. It almost seemed to like it the other day because we rallied very sharply on a day that could be considered, I guess, like a third day follow-through type move off the lows on the pullback. So, but you got a nice sharp pullback, and the market's running back to the upside. Is this, somebody's asking if this is, would you consider AMBA as a potential bottom fishing? Well, it's flashing a pocket pivot here coming up to the 50-day, and it's off the lows of this pattern, and it looks like that. So if you think it's going all the way back up, maybe that's you know, a trade you could try using the 50-day as the moving average. But these things, you can see there was one here that it had that didn't go anywhere and it broke down. And so it doesn't necessarily have to start going anywhere. It's really just trying to bottom. It's not really rounding out any lows. So yeah, I'm a little skeptical about this one. Somebody's saying PANW, they come out with earnings on Monday, so that's a pocket pivot, I guess, coming off the 200-day line, but you got earnings on Monday, and I don't think I'd really be inclined to step into the stock before earnings. But you could also see it as just pushing into the 10-week line. And notice also that this has been pretty well, it's reasonably tight trend all the way up, and now it's getting a little bit loose, and we'll see what earnings do, what it does after earnings. But you have to take into account that some of these other stocks like FireEye and Fortinet and Cyber have all gotten clocked on earnings. So can't say I'm a big fan of buying these right here, right now, buying Palo Alto Networks into earnings based on what you saw yesterday. So, but it is technically a pocket pivot at the 200-day line. Whether it really turns into anything remains to be seen. So let's see. Someone else was asking us to comment, and I don't really understand the point of the question. You know, they want us to comment on this, which I guess was attacked by somebody, some hedge fund money manager or something, as being fraudulent, I guess. But I don't understand what I'm supposed to comment on. Technically, there's nothing actionable here. And it's not like I'm going to sit here and say, oh, yeah, you should buy this because it's so cheap. It kind of reminds me of VRX. If you try to buy here or here, you're just getting clobbered. And if you're having a tough time in the market this year, and even though I'm up double digits for the year, it's still a difficult market. It's still very choppy, and sometimes it seems incoherent. I mean, an example would be, I was looking at Apple breaking down. It comes into this area of congestion, so that's a cover point, and then it runs back up to the 50 days. So I went heavy short here, thinking this thing was going to break down and head for the lows. And of course, it gaps up on, what would this be, Wednesday, and blows through the 50-day, and so I just got to run and cover that day. And it continues higher now, and now we're approaching, we're filling this gap, which in my view probably may put it back in shortable range. But that's the sort of thing you're dealing with. Stocks break down, they jack to the upside, so it all becomes a short-term trading game. And the idea that things are necessarily sustainable, or that you're going to make big money taking big positions in stocks, is somewhat pushing it, I think, at times. So I'm watching this coming up into the gap here, and maybe it stops right there. It turned the other day on a big buy recommendation from Goldman, which is pointing out that the stock trades at a discount to the S&P 500's PE, which to me is a stupid comment, because if you look at Apple's PE, it's been 15 or lower, whereas the S&P is close to 20 since 2012. And the stock declined 47% in 2012 when the PE was at 15, and the PE went all the way down to 10 before the stock bottomed. So, that's their analysis. So therefore, it should have a multiple equal to the market, and on that basis, they say it's worth $160-something. Yeah, okay. In my view, it probably just sets up a short sale opportunity. So you want to watch how this gap acts. I think we're running. What's our volume level looking like right now? Let me go to my.
Probably gonna be heavy since it's triple witching. Yeah, Ripple's only on the end of every quarter, so.
Pardon me? It's triple.
Ripple's only on every quarter, so it would be a triple witching. So the volume should be heavy. Let's see.
Yeah, you're right. You're right. Well, right now Apple's running 10.2% above average here on this readout. So what are you showing?
Yeah, I'm showing that, well, first of all, the New York is trading 30% above normal, but the NASDAQ is about flat, interestingly. And Apple is just 1% above normal.
Okay, so it's declining. Whoa, what's going on there? Those the birds that live with you there, Dr. K? Somebody's asking, does the NUAN, I was looking at this yesterday, actually, does the BGU look good to me? I don't understand what that question means either, because a Bible gap up is a buy signal that's actionable using the intraday low of the gap up day as your stop. So the low here is 1849. So if you bought it on this day, that would be your stop. Now it's up, 10% higher from the low. And so I don't know if the question means that, yes, you should run and buy it now and sell your house and everything else and put all your money into it. It is holding up tight, but that doesn't mean anything. It's not making any further progress. It's way extended from the intraday low here, so why would you want to try and chase it up here? You'd be looking for some kind of pullback, I would think. So, if you're looking for us to bless something and tell you can go ahead and buy it, I think that's kind of silly, because there's a particular way of operating based on the rules of a Bible gap up. So you just ask yourself some simple questions. Where is the stop? It's 1849. That's the intraday low of the Bible gap up day. Where is the stock now? It's at 2022. How far away is that from your stop? Well, 10%. If you're willing to take a 10% risk in this stock, then I guess you could buy it here with the idea that it goes higher. If it's going tight sideways, I might wait, and it's holding up here. If you want to take a shot at it, then you could use the lows of this range here. So right here would be 1981 if you were going to shoot at it. But you have to be able to figure that out for yourself. In terms of if you understand the risk of the trade, you got a 10% downside move that would still keep you above the intraday low here, then that's your risk. And you got to ask yourself, are you willing to sit through that if that occurs and you buy it here, or after you buy it here, or would you rather wait to see if something sets up, or is there another way to set your stop? Because what you're assuming here is if this is tight, then that means it's going higher from here without pulling back. And so that theory would be blown out of the water if it broke the lows of this 3-day range. So what would you do? You'd set your stop at the lows of the range. Common sense, okay? And I talk about it all the time, that you would be surprised how well common sense can work in the market, and that using common sense once in a while, you might try it. Too many people looking for gurus to tell them what to do, and I run into it all the time, like the guy emailing me, should I buy, Valiant at 120 or 118 because, it's cheap, and Ackman, what's the guy's name? Last name is Ackman. He's a big hedge. He's getting his ass handed to him and a few other parts of his body as this thing comes in. And he went and bought, I don't know, 2 million more shares up here, like at 160 something. And now the guy's just getting creamed. So he doesn't know anything. But, people ask me, oh, should I buy Valiant? I mean, that's a stupid question. Figure it out. Am I going to buy something in a cascading mode here where there may be some fraud? Hell no. So, figure it out. It's not that hard. Just like this one. It's like there's nothing to figure out there. This thing's getting hammered. Somebody else wants to know what we think of FIT. Well, FIT is a piece of crap. So, you got a gap down and a sideways move here. It looks like it's going to head lower. There's a lot of competition here. I thought this thing might have a chance in here when you got some pocket pivots, but they came out with a good earnings report and then shot themselves in the foot by offering a 20 million share offering. They could only get off, I believe, 17 million shares of a 20 million share proposed offering, and I think the price was like $28 or something like that. So I'd have to look at that. Anybody know what the price of that was? But that's a piece of crap. It looks like it's going lower. So hot stock dies. It looked like it might have a chance, and they shot themselves in the foot right there. And that was all she wrote. So anyways, UA, this is another, this was a great short sale last week as it rolled off the 10-day, 20-day moving average confluence, and then you undercut the 200-day moving average, and I wrote over the weekend that it's probably sold out. So you'd want to look at it coming up. Now it comes into this area of overhead, and I think it becomes shortable up near the 20-day moving average. So there's another one that I think is similar, is this Ulta, which just, I don't know if there's any news. I didn't see any news on this, and I've been looking around. The stock just blew apart last week, last Friday, I guess it was, on huge volume. And so far this week it has wedged back up into the 50-day moving average. This looks shortable to me. It might go just a little bit higher. I actually have right now 1,000 shares. I'm kind of working it. Also short Apple right here on this push. Got up right up to the 120 level. That was good enough for me. But I'd watch this one. Let's take a look at this on the 620 chart. Let me clean all this up here. get it back to looking like normal.
Alta sold off with a lot of retailers because there was a lot of negative news
Yeah,
out on that
DKS
sector.
got hammered, I think, on that day too, right? No, that was actually on Monday. It was already getting hammered. This has been a good short sale target too, but UA fits into that category. But retail, I think, has been having trouble. Ross Stores is gapping up today, but that might just be a short right there. So I think retail stays weak. I think it's going to be a crappy Christmas. So somebody mentioned that I cuss a lot. I guess that's true. But you know what's interesting is that I'm an incorrigible cusser. Sorry, I can't help it. My mother, you know, kind of messed up on that thing. But my kids who are teenagers, I've never ever heard them use any kind of dirty language, which is very interesting, even with their friends. So I guess they think it's kind of something that silly old men do. In any case, let me just get these back to normal here. Looking good. All right, where were we? Let's see. Ulta. I wanted to look at the 50. Here's a 620. I mean, there's a couple of ways you can see that. Number one, you ask yourself, is it at a resistance level? Yes. May go a little further and fill this gap. Do I have any basis for shorting it? Well, you had a little cross right here. So, you know, that you can put a little out there and then see where it goes. These things don't always work, but sometimes they do. Remember last week I was talking about, in fact, last week I was shorting Netflix at 114 right here while I think we were doing this webinar last Thursday, and I got a nice break to the downside, you know, 10% in nothing flat in 2 days. Usually I'll take that if I get it. And then I thought I'd short it again, coming back up into the 50-day line and it pushing me out and just flip and go long. Then at the 20-day line, try it again, and it just keeps going. So these things, you know, I can short stocks and get a nice break to the downside of 10%. I'm going to take it. And a lot of times it also applies to the upside as well. So Ulta selling off the retail carnage from yeah, well, that's what they got hit, but I think that makes them vulnerable to rolling over here. So, you know, you just, if you put it out, you know where your stop is. And I think, you know, in any market environment, I don't care how, and let's be honest, what Dr. K's talking about, I see that happening in the U.S., you know, where they want to start controlling speech, and you see all these bratty college kids all talking about how they're marginalized and all this other stuff. And I don't know, I like to joke, in my family, I'm the only one who's a full minority, because my kids are half Mexican American and half what my wife is, which is mostly, well, all Northern European. So I like to say that I'm the marginalized one in the family. And I'm being oppressed by white privilege. Yeah, sure. Anyways.
I like that.
Yeah, we joke about it a lot. I don't know. My son, at the age of 8, made the observation. He comes home from school one day and he says, "Dad, you know, I've figured out that to be a liberal, you have to be incredibly stupid." And he used the idea that Obama is actually half white, yet everybody calls him a black president. So maybe Ben Carson, he would actually be our first full black president. But you don't know, he could have some European blood in him. You know, they say that Barack Obama and George W. Bush are distantly related, and now you know why they're both morons. So that makes perfect sense to me. Anyway, somebody's asking about Nike. Dr. K, should a pocket pivot on this? Is that, I put it up there. Did you issue a pocket pivot alert on this, Dr. K?
Let me see.
Oh, no, this is another question. No, I went, this one, short. Go ahead.
No, nothing's been issued on this one.
Okay. No, I think this is just a general question. Dr. K issues a pocket pivot report at the end of the day. Should you buy at the open the next day? Well, again, use your common sense. Why do you want to treat a pocket pivot as some sort of red light, green light buy signal? When I see a pocket pivot, and I'll give you an example of a stock I've been long the last couple of days, last few days. Here's a pocket pivot, okay? Or here's a pocket pivot here. Does that mean you just go and buy the next day? Well, you got to look at the chart and use a little common sense, just a little tiny bit, okay? I know it's hard sometimes, but you know, develop that ability in yourself, because I think one of the biggest weaknesses of investors, and I admit I get a bit testy about it, is that they don't understand that they're a lot more empowered than they'd like to think they are. They just need to use some common sense. If you want to think of the pocket pivot as being some mechanical, yes, don't think, just buy. then you're missing the whole point. A pocket pivot is an expression of technical strength. It is not necessarily in and of itself a buy point, because if you think about this, this is a pocket pivot. The 10-day line is at 28.72. The stock closes the day at 30.97. So what is this, 10%, 7-8% above the 10-day line. All right, so you have to ask yourself the question, if I buy it here, where is my stop? Anybody want to answer that question? Well, you could use the 10-day line as your stop. If you want to give it more room, the 20 or the 50, I don't know. Personally, I'd use the 10-day line. My view is a pocket pivot should at least hold along an area of support, maybe along the lows. But I would not buy this, period, because in this market, we observe time and time again that when you have some strength in a stock, it generally doesn't last. And what you need to be doing is looking at buying on a pullback. So on this one, you get these little pullbacks, you get another pocket pivot, and of course it goes nowhere. Now, on the next day, you come down, you gap down, and it's more in a position to buy along the 20-day as it starts to flatten out and the volume starts to dry up. So I see the pocket pivot. That tells me that this is a constructive sign in this stock. Okay, the second part is, where is it in this pattern and how do I make a low risk entry? So you think about it for a couple of seconds, and you pick it up later on the low volume pullback in here, and now the stock's going to new highs. But to tell you the truth, I'd sell into this move. So, because I think that's really all you're going to get. This stock's kind of up there. It's broken out here, right here, I think. So it's a little bit up there. Good 5 points. Yeah, it's about 20%, close to 20% above the 26 breakout area. So, and that's how it works. So, let's see, looking around. Okay, so, look at some of these other things. You got LinkedIn holding along the 10-day line. So it's looking like it wants to go higher. It could back and fill. It tested the lows here, so it held above the Bible gap up low, never hit the 20-day. It could pull back again and meet up with the 20-day. And I would also point out that when you're playing stocks, if you're short stocks and you have a short watch list, if you're someone who short sells or sells short, and you have a long watch list, okay, that's the way I was operating. I'm watching both lists all the time in real time and flipping through my charts. I'm not assuming that I'm just long and I'm going to be long and strong and I'm not going to look at anything else, because a lot of times when the market reaches a point where it's been rallying for several days and it gets a little bit exhausted to the upside, you'll start to see short selling stocks or short sale target stocks setting up at points where they can be shorted. And sometimes you have to be a little bit patient with that, okay, in terms of waiting for it to finally run out of gas. And you might test it once or twice and get stopped out real quick, hopefully, if you're quick enough and not slow in terms of obeying your stops, and then eventually hit it. But I find that, assuming that markets in party land, like for example, when we were making the highs here, I noticed the UA was coming, which is, you're looking at, whoops, here we go. It looking like a left shoulder ahead, and then you're rallying right into the 10-week line. So this could be a right shoulder. So I think it's a short up here probably, and it turns out that way, and it works very nicely. So you're looking at things like this, and you're aware of what's going on both sides of the market, because I think you're still in this choppy chop and slop land, basically, where you're not going to see huge upside. You can get a few percent either way, and you can try and play it if you're oriented that way. Now, if you want to take a longer term approach, I think, in situations like Amazon, for example, there was a Bible gap up here, and I've talked about this. You could have bought it right in here the next day, and it's moved higher, and it's gone about 10% higher. The only problem with that is maybe that's all there is. And IBD says, it's 20% from the breakout point. I guess it is. And so, you'd want to sell into that. Of course, they never told you when to buy it, because when it broke out, it gapped up and it was immediately extended. So forget that. But we know a Bible gap up can be acted on. And just because we don't put an alert out on something, if you see a Bible gap up in something, you know the rules. You know the parameters for handling a Bible gap up. You use the intraday low of the Bible gap up day as your stop, or at least your guide for a stop, if you want to give it 2 or 3% of so-called porosity, as Dr. K puts it, to the downside. So it's a very concrete method. I like it because it's very concrete. And you don't have to have our opinion on, yes, you should buy this, because sometimes the best ones, you know, are some that I missed. You know, so I think it's pretty concrete, and it's a great buy point in the sense that, number one, IBD doesn't endorse it or even talk about it. And so the crowd sees it as an extended, as being extended from a breakout point, and so it has a contrarian thing going for it. And in that sense, it works. But it's very concrete, and if you see it in any stock, you can try and play it. So, for example, the other day we had CRM had a viable gap up here, but notice how the low was 80.45. It undercut that by about 1% or so this morning, came back to the top of the breakout point. Now it's trying to push higher. Doesn't look too bad. I guess if you wanted to buy it here at 80.95, your risk is either this low here, which is, you know, a little bit over $1 lower, $1.50 lower, big deal, and within 0.5%, I think, of the low here of 80.45. So there's one you could have played. You would have to give it some ferocity. So, you know, no guarantee that they're going to take off. And in this market, they generally don't. Although, you know, Amazon has done pretty well. Google's another one, you know, nice and slow, big cap. But see how it's come out of this sort of loose structure. I don't know if it's improper double bottom or what it is, but it's come out and it's running higher though, and it's working. So, you know, if you bought the Bible gap up, it's working, and there would be no reason to sell any of these. So this is your longer term. If you want to try and give the market, and you think that we're in some glorious new bull phase, which I don't know. I'm skeptical, and so I've found that a bifurcated approach where I'm looking at both long and short setups, you know, whenever the market's doing, I don't really get hung up on the indexes. If the stock's rallying, it's rallying. If the stock's rolling over, that's what it's doing. I'll just play it as it lies, so to speak. But you know, you could be sitting with these. If you bought them here, that would be your stop, and you're going to hang out until you see either this low broken, or it, you know, the 50-day moves higher and it violates the 50-day, or whatever you're going to use for your stop on the position. So, you know, you could be operating on that basis, because I think it is a big stock market, and that you're seeing money pour into these big cap names. Amazon, you know, we're seeing money go into Netflix. We're seeing money go into Intel, which had a pocket pivot yesterday, kind of a funky position. But look at how it's going to higher highs. So it's starting to look ugly here. Bounces right off the 10-week line. But again, this pattern, are you really going to buy this pattern? You know, it's loose. It's coming all the way back up to this area of resistance here. Get out my awesome pen so you can see it along here, and maybe that becomes a point where it reverses back to the downside. So I just be skeptical of this. Have you been looking at defense stocks? Well, some of them show up on my screen, but I can't say that like Raytheon hit my screen the other day. Had a pocket pivot. It's moving higher, but you know why this is happening, right? Because World War III is about to happen, and so, you know, all the defense stocks start moving. You could have bought Raytheon, Lockheed even on pocket pivots. They're edging higher. Just not clear to me if the market were to roll over, they'll probably go with it. Maybe not as bad. Although I do remember in 2000 when I was long 1 million shares of Lockheed back in after 9/11. It was like the week after 9/11. I covered all my shorts and then flipped to the long side and bought a bunch of Lockheed, and I remember it kept going with the market, and then in January of 2002, the market rolled over, and Lockheed just kept going. And every day that the market was down, it would keep going higher, and eventually it topped out and rolled over. But it was interesting that it did continue to move higher even as the market was getting into trouble in January of 2002. So, but there's, I guess, what are some of the other? Is ATK still around? No. Remember, they used to be a ammunition maker. Notice they put some Apple out here. I actually have a pretty decent position now. Let's see if it works. So, get my. Let's reorganize here. Yeah, there's Apple. You can see we're just starting to get a 620 sell signal on it. So it makes total sense to me that it would break down. If you look at it on a weekly chart, this is all it looks like, okay? So Goldman Sachs, and I remember in May of 2010, just before the flash crash, I was shorting X US Steel, and Goldman Sachs came out and put it on their conviction buy list. And let's see if I can show you the exact day. Shrink. Honey, I shrank the chart. Let's see, here we go. That was May 2010, right? Let's see. And I remember just shorting the hell out of that thing that day. And so here's May, and it was one of these, either this day, I think it was this day or this day. You see the gap up moves in here? Let me make it bigger. You can see the gap up. There's a gap up here and a gap here. I'm trying to remember which day it was, but on one of these days, they made U.S. Steel their focus buy list, and there's probably some PE argument. But one thing to know about Goldman is they have a lot of big clients, and a lot of times they like to provide cover for their big clients. So they have clients who want to dump Apple or whatever stock, XYZ, ZYX. They'll go and put a silly buy recommendation that can be justified on legal grounds. Because remember, a lot of portfolio management is about not getting fired and not getting sued, okay? So if you can paper your file with modern portfolio theory like justification for buying a stock. So with Apple, we say you won't get in trouble. That is what I mean there. And so with Apple being selling at a so-called discount to the market multiple, which the S&P I guess is 18 to 20, somewhere in there right now. If anybody knows for sure, let me know. But it's not something I pay attention to. And it's selling at 13 times earnings. Then it's at a discount, and based on that, it should rally to 160. Well, that's a bunch of BS. But that's typical, what I call analyst legalese. In other words, they can make what is a very rational case for the stock based on some stupid analysis about PE ratios, which modern portfolio theory, which is the institutionalized form of portfolio management out there in the institutional world, and around which the whole legal structure, the prudent man rule, all that other stuff of investing has been built, then they can get away with it. But really what they're probably doing is running cover for clients who want to dump the stock. And with X back then, that's exactly what they were doing. This thing just got pummeled from there, and that was it. And I remember that was a year or the month I was up like 85% in 1 month shorting. So, and some of that was courtesy of these calls from Goldman. But you really have to, look at what they're saying and then decide, okay, they can push it. And every moron in the planet is going to want to buy. Every retail buyer is going to want to buy Apple, and I'm sure brokers desperate to do business, and most of the brokers I know are pretty desperate to do business these days. They can tell their customers, well, Goldman put a buy on it, so let's all jump in. But it's pretty overowned, and I still think, why is it suddenly so hot after it? Here you had a gap down on much more volume than you saw on the upside here, based on slowing iPhone sales. So anyways, somebody's asking about BA, Boeing. Boeing's another one, yeah. So, but I'm not going to buy these. I don't think you have some massive upside potential here that you need to be all over. I'm just very skeptical of the market in general as being little more than a trading party. If you can trade it back and forth, great. But I've been doing it, and I'm winning more than I'm losing, but I'm still up low double digits, which to me is nothing. To tell you the truth, it's kind of embarrassing. But I will say that if I'm able to hold in positive territory for the year, which I think is likely, it'll be the first time in my career that I've been up 3 years in a row. 53% in 2014, 115 last year, and whatever we turn out from here by the end of the year, assuming it's up. So I've actually never done that. You may ask why not, and I think one of the reasons is when I have a big year like last year, I will tend to look at that as something I can try and build on and be more aggressive, since theoretically I have such a large cushion. And I found sometimes I'll get too aggressive. So I think I've gotten too aggressive at the wrong times this year, and that's why I haven't been able to do better than I have. But in a year where guys like Ackman are getting their head handed to them, and isn't it true, Dr. K, most hedge funds are getting stomped on, and market timers are all getting stomped on? Isn't that right?
They said that this is the worst year for hedge funds since 2008, when of course a lot of hedge funds went belly up. And again, it's not surprising to see because this is absolute madness and chaos in the chart patterns on the S&P. And I go back through those 48 years that the S&P is traded and look at the dailies, look at the weeklies, and it's very evident, self-evident that there's a tug of war going on, and it's the manipulation at its highest form by the Fed. And so what's interesting though, and I'll just put a quick chime in for the volatility model, is it's shocking to me, but I understand why it's working. It's shocking that the volatility model, if I'd taken every signal, I'd be up appreciably huge this year. And on a year like this year, which is what surprises me. And someone might ask, well, how does it perform if we're not in this period of chaos? Well, my answer is it performs a lot better. And that's why I'd like to get the model to lay down some really good returns as it has in the past. And again, I've said, I've taken some of the signals and they've worked out, and I'm up low double digits for this year, mostly because of that. But I'm, as I said to everyone, that I'm going to give every single signal that comes out, even though it's going to mean some whipsaws, because ultimately that's how you get the best return out of this model. And I also wanted to make a quick comment on that. What was it, the IPHI?
Infi?
You could pull that one up. Yeah. We put that on the list I
think down
on
here.
The 6th. Yeah, 6th of October.
Right here. Right here.
Actually, a day before that. The first pocket pivot bar.
Wasn't it here?
Was
right there?
Yeah, first one.
Or was it here? I think it was here.
It was right. Yeah, there you go. That's it. There's that short bar between the two long ones.
Let me.
On the list there. And then we put it on again on the 15th where it had the breakout. And
here.
so you're in some. No, a day before that.
This day?
It was the day before. Yeah, that day.
Okay.
That was the 6th, I believe. Whatever.
There was another one here.
Yeah, then on the 15th it went on.
Here.
And then
here.
Bible gap up that it had. So on the basis, if you had cushion in the stock and on the Bible gap up, I wouldn't be buying it at the close. If this, I don't remember what time it went on. If it went on close to the close, then you would wait for the pullback because it's a bit extended, and you already have, even though you have cushion, there's still no business in buying it that high because you know what your risk is. If you don't mind buying it that high, your risk is basically a couple % under the lows of that day. If you don't mind that kind of a loss, then I guess go ahead and buy it. But it's a bit extended there, and then as you can see, it never undercut that low by more than a couple %. So you could buy close to that low and then just sit with the position, and now it's going higher. So that's another way to have played this one. But yeah, this has been a very good stock for this year, especially in a year like we've had, because the gains, as you can see, when it's first being put on, it's at 25, and now we're at 32. And you may have pyramided it because there's been 3 buy points in this one. So you may have a pretty nice position in it.
Sell it. Now sell
Sorry,
it.
I couldn't hear you.
Now sell it. It's up. I mean, that's what
thing is. You market when stocks get ahead of themselves in price. You really want to take your profits. Now, if you bought it on the 6th of October, you're sitting on a 28% profit in this stock, and it's trying to break out of this pattern. I would keep. I mean, if I had the position right now and I bought it, with a 28% gain, I'd keep my stop really tight on this one. I like to, some people like to sell in the strength, and that tends to work very well in this market. There's nothing wrong with that. I'd probably keep my stop real tight to where I would sell if it undercuts the low of today. Then I'd be out of the position, and I'd still have a nice 6% gain in the position.
Let's see here. Oh, this be here. Whoop. Yeah, it's hanging up here. I don't know. I bought it down here. I sold this, so do whatever you want. But I don't think you sit too long with these things. You get 10% or whatever. Take it. especially as something, if you look at this on a weekly chart, it's been up there for a while. Anyways, what else? What else? Under Armour is failing right there, so that was a decent short right at that point. So I'm watching some of these other things trade. I think Apple is probably one of my favorite shorts right here. It doesn't have to work, but you are seeing the cross here. Everything's starting, it's breaking down pretty fast. I don't know if that's a function of options expiration or what. So let's see, somebody says, do you day trade more than swing trade? It depends. Some days I do, some days I don't. Depends. I don't, there's nothing static. Everybody wants to put everything in a box and say, yes, I do X more than Y. I might do X more than Y, or Y more than X, or Z more than both of them, depending on what the market's doing. And that's really the bottom line. I'm just flexible, So it's like, how many times do you go to the bathroom a day? Why does that matter? Anyways, any other awesome questions? I want to run through some of these stocks. Luxox it's really thin, but it looks like it's trying to go higher. I don't know. GoDaddy's another one. You had a Bible gap up, and it's hanging tight along the 10-day line. But this is a kind of a precarious position because you are in this pretty deep cup with handle. So the question is, are we looking at something that is going to start this huge upside move, or something that could potentially be a type of a pot? And I think this could go either way. So if I'm long this thing, obviously you had to have bought it closer to the intraday low here. So the pullback here, the 20-day, was a perfect buy opportunity if you were watching it. It was a quick one, and you're up 10%. And in this market, that's 10% or close to it, that I would be more inclined to take than to sit on and think I've invested in some glorious new winner that's going to double from here. I just don't see that happening in most of these names. So any decent Homeland Security type stocks, I don't understand why you would have to worry about that. First I would ask myself, any decent stocks, if they happen to be Homeland Security type stocks, that's something else. I don't sit there and go, oh, let's see, Homeland Security stocks. Let me see if I can find some. That's overthink. It's stupidity. Okay, and sorry about that, but it just is. What's its Homeland Security stock? Taser. Yeah, that's a nice one. So I would just get out of this idea of thinking that you're going to find some theme and then run around looking for some stocks that are going to fit the theme, and then they're going to go up on the basis of that. Okay, they're going to go up on the basis of their technical action. That's all you need to look for. And who cares whether they're Homeland Security, or they sell widgets or whatever other product? If the stock is showing the right technical action, that's all I care about. I don't care about whether it's a Homeland Security or a cloud stock or whatever it is, or any hot little theme that's going on right now, like drones or whatever, Go ahead, Dr. K. You want to make a point there?
What was interesting was, in my history of trading, I not once ever figured out which group is going to dominate. If by chance more than 100% of my account was in a particular group, it's only because enough stocks from that group showed the right price volume action so that I found myself buying each. So trying to figure out things like which sector's going to outperform, it's a wasted exercise. I don't think you're going to really make much money off it. If people could do that with any consistency, they would be multi-billionaires, and there's no one on record that I know of that has that ability. So just keep to the present and keep to the technicals.
Yeah. Now here's one. Speaking of technicals, here's a stock that was rallying on earnings this morning, has reversed, and maybe come short using the 200-day line as a guide for a stock. No, excuse me. And I think maybe this is a Homeland Security stock. I don't know. But I think some of the questions, I think they're good questions in the sense that they help me expose some of the stupid things that people stick in their minds about investing. Like if they read in the newspaper about some concept or something happening, and they're going to go and run and buy the stocks. Like, with Taser, you queued up whenever there was news that some police department was going to buy their products. And you see that a lot, which I think is just stupid investing. But you see people do that, and I don't think you really need to focus on that. Remember, the stocks lead you to the themes. The themes don't lead you to the stocks, okay? It's the idea that you first find the themes in some big think process and then find the stocks just seems to presume that you're smarter than the market, which most people aren't. So I don't think I've met anybody who's really smarter than the market. Even Bill O'Neill, Bill was great at being able to see when something was hot and then figuring it out later. Like he first said the internet was a fad, but he made a ton of money off America Online once he saw it moving. So he didn't need some theme to click in his head before he jumped on America Online. He just saw the thing moving, and the stock let him. So how many years did it take you to become consistently profitable? So I'm gonna say 20. What's that, Dr. K?
I was saying, I remember in '96 when I started, Netscape was the first internet IPO in the history of internets, and he was very skeptical, but I do remember overhearing that he had actually decided to trade it, and he did very well in the position, and I think that kind of got his interest in the whole space altogether.
Yeah. Anyways, okay. Somebody asking the question, how many years did it take you to become consistently profitable? And I guess I would have to say 22 then, if it's been the last 3 years where I'm gonna be up 3 years in a row. Now I could still blow it, so don't assume anything. But I don't think it's a matter of being consistently profitable. It's a matter of making big money when you are, and not losing so much when you are big money when you're right, making big money when you're right, and not losing a lot when you're wrong. And that's what Bill O'Neill would do. So let's see. I wonder if Netflix is short up here too, maybe on the basis that it might roll over. That's how it worked out last time when it broke down last week. I'm looking around. Some of these, we're going to shut down here real quick. We're pretty much at the end. I'm watching some of these. They're not really giving way. Gilead, Amgen, Biogen. They're kind of fluttering around. I don't know if there's another down leg coming. I guess if the market broke down, there might. But it's hard to say with any of these whether they're shorts. Is this a short? This might be. Fortimet might become a short right here because you're in a bear flag after just a massive, ugly breakdown from a Head and Shoulders, and you're in this bear flag. You're right at the 20-day line, so this could become a short right here. Let me take a look at these. Mobileye at the 20-day might be a short right there. Tesla ran into some resistance yesterday, and it was a short up in here. We put out reports on this one, but it got up. Notice how it filled this gap. See that? Broke down, then came back to the high end of this gap here, and now it's broken down further. So, our downside target for this thing is 180. I think it's headed there still. But you can see how if you're shorting these things and you get kind of piggy, and we wrote on Monday that the stock was in a position where it would rally, so we would be looking for a rally to short into. And this one got close to the 10-day line. You can see down here earlier. And it was a little bit of distance, but only about 2% away from the 50-day line. And I'll start looking at things on the short side when they get within 1 to 3% of a moving average, and just look around and see if I can pick off 620 sell. So Tesla recalling 90,000 Model S. Wow. So there's news. They're recalling 90,000 Model S's. Wow. It's a piece of junk. Elon Musk is a hypester, and I think he should spend more time trying to run his companies and hyping them. And eventually I think he's going to get in some trouble with that. But I think Tesla's done it. Tesla's a $20 stock. When the next bear market comes, it's going to 20, maybe 10. So check the seatbelt.
Actually, a lot of his focus is on space exploration, as you know, and so he's actually. I think he made a formal announcement that he really wants to put his capital and focus into getting humanity off the planet, because we have to diversify across the galaxy if we want to have any chance. Because he's in the camp that says we're all gonna blow ourselves up basically if we don't find some sort of habitable place where we can diversify our species within the next 30 years, 50 years. So. Yeah, he's on that bandwagon right now. Dropping
acid again. Okay, you might check this out. NXPI up around the 20-day after a gap down might be a short here using 20-day as a stop. I'm trying to look at some quick potential short ideas on stocks that are rallying. So I was also looking at these. AGU is a short. That might be a short along here. MOS, looking like it wants to break down. Mosaic, but these are all pretty far down there, but they look like they want to go lower. They look pretty grim, actually. Let's see. Data was another one that blew it on earnings. We talked about Splunk, but I'm not sure. I'd watch for this to probably pop towards the 200-day moving average, which is about 150. Workday came out with earnings in blue chunks here. They're trying to get support today. I'm not sure what this is all about. I might look at shorting this. We'll watch this as we progress through the day, but watch for a 620 sell signal on this. Right now it's rallying to the upside. I'm not sure why, but they sure got pummeled. I wonder if that's earnings or options related. Anyways, how do you build a watch list if you don't look for themes? Well, how do you think you build a watch list? you screen on technicals. You don't build a watch list based on some themes that you pulled out of your little pinhead. You look at the technicals on your and see what's coming through on your screens. That's how you build a watch list. I don't run around looking for themes to build a watch list. I run screens every day and pick off things that are acting well or setting up on a technical basis, and that's how you do it. So that's, sounds like you're kind of new at this. The person asking the question, which I guess is fine, but you screen on technicals, and that's how you build your watch list. So
watch lists are dynamic; they're not static things. So they're gonna. I add to and subtract from my watch list every day based on what my screens tell me.
Yeah, and that's how you build your watch list. So your watch list could be everything we put on the Pocket Pivot or Bible Gap Up lists or reports out on those over the last couple of months. Right now. And there's been a number of them, or other ones that you're picking up yourself. So, anyways, we're kind of run over our time here. A little long-winded today, but I'm looking at some things on the short side. I don't see anything I want to jump on right now on the long side because you're kind of up there. And speaking for myself, I'm more looking at taking profits on short-term trades over the last few days, and that's about it. Meanwhile, I'm just kind of scoping out for the setups on the short side if the market rolls over again, because it could. I don't think you have the conditions for a roaring bull market. I think you have the conditions for a choppy market that's going to cause you to lose your hair and whipsaw you if you're not quick. And that's the bottom line. So anyways, I see the person I was beating up on those questions says thanks for the webinar, good webinar. So I like that. Someone can take a little razzing there. Some people, their feelings get hurt. And I think if your feelings get hurt easily, then you shouldn't be an investor. Because the market is going to slap you around a lot.
That's an ego trip, by the
yeah,
way.
so
if you get passed up that easily, that's your ego trip. That's an egoistic response.
Yeah, and I got slapped around just a little bit the other day with my Apple short position when Goldman went and gapped it up a couple of bucks. I mean, it's not a lot, but if I'm short 100% position, it's going to kick me for 2% pretty quick. And by the time I cover it, maybe 2 to 3. So that it happens. So you can't have a thin skin, all right? Anyways, you guys, thanks for showing up as always. We'll catch you next week. Watch your short sale targets, I say, because something might develop on the downside. Next week's going to be slow, though, because of Thanksgiving. So we'll see what happens. Anyways, have a good weekend, everybody. Take care.
So long, everyone.